Arise business analyst Bode Ososanmi joins me now from our London studio to discuss this and the effect on emerging markets. Great to have you again, Bode Ososanmi. So, why is this particular Fed decision so important, especially for emerging markets?
Well, not just for emerging markets, but particularly for the entire world. If you look at investor confidence as we speak, it's at its lowest since the crash of 2008. The S&P 500 is also hitting a December low. And of course, emerging markets have seen a lot of capital moving out from its economy to, of course, more developed economies as these rates normalize. But what is most worrisome is other factors like trade turmoil and the instability in the larger economy, the softer economy projections for 2019. All these are pointing to a weaker global economy. And when the economy is getting weak, that tends to be the time to pause or at least not tighten. Obviously, the U.S. economy has stronger performance, which is encouraging them to increase their rates and go to the neutral rate as quickly as possible. But, and of course, they also have stronger employment figures, and they are more motivated to normalize as they have been doing, even as the Fed had given clear signals that it would normalize rates. But, of course, for emerging markets, they've already priced in this rate hike. But if a decision is taken to pause, then I think you would see maybe currencies like the rand appreciating because it gives them a little bit more room. But I don't see a situation where we will see additional capital in very significant amounts leaving emerging markets because of the decision. But clearly, the timing is a bit of a difficult time, not just for the US, but for the world. And although Jerome Powell has said that he's more focused on the domestic economy, that emerging markets and the impact on the larger global economy may have been over-exaggerated, the impact of US decisions, that he believes most economies are able to withstand this hike. But we have to see the decision they take, obviously with all the pressure that is coming, not just from Donald Trump, but I believe that looking at the markets in the last week or so, I think they must feel a bit nervous. And there is perhaps maybe a 10-20% probability that we will get a pause from a rate hike this time they're taking a decision. But we have to wait and see when they announce at 2 p.m. Eastern time today.
So what are we expecting here? And how are emerging markets likely to react to the decision?
Well, the expectation, just like you rightly said, is that there will be a quarter-point hike that will take the rates up to 2.25 to 2.5%. The other thing, of course, is we are expecting a very dovish tone in terms of the trajectory for 2019. That means there wouldn't be as many rate hikes as may have been initially projected. So instead of 2 to 3 rate hikes in 2019, we'll probably get 1 to 2 rate hikes, which of course will be good news for emerging markets, because the more hawkish or the tighter the environment, the more risk averse and the more capital will move out of emerging markets. So the tone for 2019 is also very important. The expectation is that with the adverse data, particularly data for 2019 being projected. Again, we want to know what the Fed thinks about 2019. We don't know in terms of updating the US growth data for 2019. It is expected that they will maybe mellow somewhat in terms of their projections. And with lower growth, then of course it may mean that they will want to take a pause. The other thing they are doing is reducing the size of their balance sheet. And when you're reducing the size of your balance sheet and tightening at the same time, all these are really forces that could bring down growth or could impact your growth adversely and push the economy into a recession. So all these are the types of data, the types of issues that the Fed chairman and the committee will be considering, and I'm sure they'll be taking the best decision given the data available to them.
All right, then. So how will the future trajectory of rates in 2019 impact emerging market economies?
Well, if you look at the emerging market economies like China, like Brazil, like South Africa, like I say, these are economies that depend, or they benefit a lot from capital inflows into their economies from various parts of the world. If capital is moving out as rates go up more aggressively than expected, then of course they will tend to have more capital shortfalls, or they would have to borrow at a higher rate. So the two things that are happening, one is the capital shortfalls that face emerging markets in 2019, assuming we get a more hawkish tone in 2019. The other thing, of course, is the economies. They have bonds that they've taken up. The rates for many of these bonds will of course go up. The cost of borrowings will go up. The debt situation, which has been an alarming issue, especially by the IMF, concerning countries like Zambia, even Nigeria, and so on. The level of debt is quite high. In South Africa, the level of debt is quite high. The interest rates will all be going up if these rates continue to go up, particularly at a fast pace, like 2 or 3 times a year. So you can see how everything feeds into the economies of emerging markets. The ideal thing, or the obviously better thing for emerging markets, is for a pause, for us to see a pause now, and then maybe a more dovish tone. But the more likely development will be a hike, because they've signaled a hike already. They don't like to surprise, but we have to wait and see. Like I said, there's a chance they may not hike. But even if there is a hike, the tone for 2019 is likely to be softer, more dovish, in the sense that there will be less hikes. And that would mean, of course, lower cost of borrowing and lower capital shortfall scenarios for emerging markets.
Bode Ososanmi, a Rise business analyst, thank you so much for your time once again.